following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Good morning, everybody. Let's talk futures. My name is Jim Cagnino with NinjaTrader. Joining me live today, very special guest, Chief Economist of the CME Group, Erik Norland. Erik, good morning. I guess in your case, good afternoon.
Yes, good afternoon. Good morning.
You're in London today, correct?
Yes, that's right. And the clock just struck 3 o'clock here in the afternoon.
Well, and it's kind of like a Friday because tomorrow everything is closed, right?
Yeah, that's right. Yeah, everything's closed. And not only on Friday, we also get Easter Monday. So we're coming up to a 4-day weekend here.
Okay. Yeah, I think I have to go back to work on Monday, unfortunately. I don't get that fourth day.
Yeah, it's a big thing here in Europe. Most of Europe gets 4 days.
So that means the banks are going to be closed.
Yeah, that's right. Yeah, it's a full-on banking holiday for the UK, for Europe. I think the only exception is France is open tomorrow, but they're closed on Monday.
Oh, really? Why is there any reason why?
I think it's because the French have so many holidays already built into their calendar that for some reason they don't take what they call Vendredi Saint or Good Friday. It's just not part of the calendar, but they do get a whole bunch of other holidays. I think they get 3 holidays in May and June. They get, 4 holidays. They get the 1st of May, the 8th of May. They get Ascension and what we call Whit Monday.
Wow. All right. Well,
yes, you can't feel sorry for them because they have to work on Good Friday is my point.
I think they're working us too hard over here in the U.S.
I think so too. Plus in Europe, they tend to put the holidays more like in May, June, July, August. For some reason, the U.S. has holidays and things like November, January, February. I don't get it, unless they're skiing or something.
Yeah, the spring break here is a big deal, and what I've noticed is it translates into a lot less volume in a lot of the markets.
Yeah. It's also interesting too that this year Easter and Passover are separate, very separate. So maybe we'll have a little lull in volume also in around the 22nd to 26th of April as well, when that happens.
Yeah, well, it is what it is. Yesterday I listened to a great video that you made talking about Bitcoin halving, right? And I'm still trying to get an understanding of what Bitcoin is in the first place, but the Bitcoin halving phenomenon is pretty easy. And I did a little tiny bit of research, right? The first Bitcoin block was mined in 2009. It was called the Genesis block.
Yeah.
That wasn't that long ago.
No, it wasn't. I mean, it was like 15 years ago, basically. It was in early 2009. I remember reading, I can't remember, it was in 2009 or maybe the next year in 2010, the Wall Street Journal had this article. And the question was, could Bitcoin someday be worth more than the US dollar?
Oh my!
Because Bitcoin was kind of pushing up. It was trading at like 30 cents and then 60 cents and then 90 cents. Could it cross the $1 threshold? Is it possible?
Wow. Yeah. We know the answer to that now. And you're right.
Yeah.
But from the beginning, there was about 2.7 million mined per year. And what does mining mean? What does that terminology even mean?
Well, so basically they're using a cryptographic algorithm to create new Bitcoin. And every 4 years or so, slightly less than 4 years, every 3 years and 10 or 11 months, the difficulty of unlocking further Bitcoin goes up very dramatically. And so the number of new Bitcoin per year drops roughly in half. So it dropped from 2.7 million, so maybe like 1.3 million, and then turned to around 600,000, then to 300,000. And now we're about to drop down to around 150,000 coins per year. And what I think is most significant about this market is that there will only ever be 21 million Bitcoin. And we're already at over 19 million. So the pace of new Bitcoin creation is now going to come down to a very, very low level.
I read somewhere that they were anticipating that we'll reach that apex in something like 21, 24, a long time from now.
Yeah, so apparently the last Bitcoin, as I understand, is supposed to be minted in the year 2140. I don't anticipate seeing it personally because I'll be 166 years old when it happens. But yeah, it's but the thing is, the great majority of them have already been created. Something like 90% of the Bitcoin that could ever be created are already on the market, and some portion of those have been irretrievably lost. Like some people may have put them on USB drives or forgotten about them, or bought some at 30 cents and then threw away the disk because they didn't think that it was really worth anything. So I've heard maybe upwards of 1 million or 2 million are just permanently lost. So maybe the real supply is more like 16.5 million currently.
I remember the story about the fellow who had to buy a landfill to try to find his hard drive so that he could retrieve his $1 billion worth of Bitcoin. I don't know if he was ever successful.
I don't know. I hope so. I hope he found it.
Wow. Yeah, that's crazy. Okay, so we have a market. So basically what you're saying, with over 90% of the Bitcoin total supply that'll ever be available is out, right? Is out. This is a situation where supply is fixed almost.
Yeah, it's not only fixed, it's what in economics is referred to as perfectly inelastic. So the price could drop to zero or it could go to infinity, and that supply will always be whatever it's going to be. Unlike most other commodities or even financial instruments, like if the price of a stock goes up, the company might issue more shares. Or if the price of gold goes up by 800%, somebody's going to figure out some way to mine more of it. But with Bitcoin, that's not the case.
It's algorithmically impossible, right?
Yes, that's right. Yeah, so it's really an extreme example of perfect price inelasticity, which I think explains part of the reason why it's so volatile. Yes, that's the reason why it has at the moment like a 40% annualized standard deviation of daily returns, which is actually on the low side for Bitcoin. It's actually less volatile now than it was in the past. It seemed to become less volatile after the launch of futures contracts at the end of, I suppose it was the end of 2017.
Well, right. There's then two phenomenons kicked in, right? The ability to hedge and the ease of going short.
Yeah, that's right. Yeah, because before it was basically the only way you could hedge it was to sell it. And it was virtually impossible to go short it before the existence of futures contracts.
Yeah, advantage goes to futures. I always say it.
Yeah,
So
well,
let's talk.
they're very efficient markets.
Yes, for sure. Let's talk about the halving. So the first halving, right, happened in 2012, as you pointed out on your video. And folks, you could find it on the CME website. It's interesting. And what you suggested that after that halving happened, November 28th, 2012, within 365 days, Bitcoin price appreciated 8,400 odd percent.
That's right. Yeah, it went from basically just north of $10 to almost 1,000. I think it actually peaked out at around $1,200. So yeah, it was an 8,447% rise in the calendar year after the first halving.
And just to file the second halving, then is the second halving, second time they've done this halving. And by the way, let's talk about a halving first before we talk about the second halving. What does that mean when they do a halving?
So basically, it drops the number of new coins that will be supplied to the market in half. So currently, until sometime in early to mid-April, we're producing the annualized rate of around 300,000 coins per year, about 900 per day. And that's going to drop in half to around 150,000 per year, or maybe around 450 per day.
And part of that equation also is the people who are doing the mining or the creating, I guess it's called, their compensation is cut in half.
Yeah, that's right. Yeah, their compensation gets cut in half, which generally causes it to become more and more expensive to match trades. Since part of what they're being compensated for is validating trades on the Bitcoin blockchain. So typically what we've seen is that, after halvings, in the year after halvings, the prices go way up. But so does the cost of transacting on the crypto exchanges themselves, not in futures, but on the crypto exchanges themselves. And eventually you got these huge spikes in what's referred to as cost per transaction in the crypto community, or what I would describe as miners' revenue per transaction for validating the trade. And eventually that will choke off the the bull market when the transaction costs get too high, and then you'll have a massive correction. And so in its history, Bitcoin has had 4 corrections of more than 80%. I mean, what in any other market you would call like a Great Depression style bear market, Bitcoin has had 4 of those, and yet it's still at 71,000 after having debuted at a couple of pennies.
That's amazing. So we had the second halving then in July 9th, 2016. Within 365 days, price rallied 290%. And then the third and the last time we've had this in May 11th, 2020, within 365 days there, we rallied 500 plus percent.
Yeah, 559%. That's the one that took us from a little bit below 10,000 up to over 60,000.
So one casual observer might say, well, every time there's a halving, I want to get in front of that thing because we're going to rally like crazy. Is that necessarily true?
Well, I mean, it's been true in the past, but the truth is that we only have a tiny sample size, right? We have so far a sample size of 3, which any statistician will tell you is not a lot to gain a lot of inference on. And generally speaking, Bitcoin prices have gone higher, although to be fair, most of their gains have come after halvings, or after at least the halvings after that initial Genesis block was unlocked. And I think that there's a couple warning signs here. So one warning sign is that the number of people using Bitcoin has not been increasing very quickly over the last 7 years or so. It kind of grew exponentially and it started curling over until about 2016. And since then, the growth has been quite small. But that said, in addition to the upcoming halving, we've also had the creation now of Bitcoin ETFs, and that's gotten a little bit of boost to the user network and is bringing some more people, including some institutional investors into Bitcoin who hadn't previously been present in the market. So I think it's a little early to say. I don't think it's a guarantee we're going to have a huge post-halving rally, and indeed we're rallying going into the halving, which indicates to me that some of that may have been brought forward in anticipation. But I think it's possible we could have a big rally, but I'd also keep a pretty close eye on the blockchain info data on miners' revenue per transaction, and if that starts spiking, that might be a red flashing warning signal that the market's getting overextended.
So you mentioned use, right? The use of Bitcoin might be going down, and there's no circumstance in my mind where this becomes the reserve currency simply because for no other reason or many other reasons, there's a limited supply.
Yeah, that's right. I think that Bitcoin, I don't think is well suited at all to becoming any sort of an actual currency. And in fact, I actually don't consider it really to be a currency at all. I consider it to be a crypto asset. I mean, the idea that you're going to use Bitcoin to buy coffee or a car or a house is absurd. It's too volatile. And you're right, the supply is restricted. I mean, part of what makes fiat currencies work, and also part of what makes them dangerous, is that central banks can create more of them. And so sort of in an ideal world, the central banks creates just enough new currency to devalue it by about 2% each year, which because people know it's going to be worth less in the future, it gives them an incentive to either spend it or to invest it. And now, of course, fiat currencies can be dangerous if central banks create too much of them, in which case you could have a huge downdraft, in value, which would lead to like a hyperinflation, like we've seen in Venezuela and Zimbabwe and many other countries. But I think if we hypothetically were to use Bitcoin, we'd find ourselves in really like a Great Depression-like situation where you'd have constant inadequate demand because the currency would be way overvalued and possibly increasing in value over time, which is really undesirable. So I don't see it ever becoming that way. But when I say the user network, what I'm referring to more specifically is there's a data series you can find at blockchain info /charts that refers to the number of transactions per day. Which gives you an idea of how many people are really using it. So that grew very quickly in the early years, and then has really grown very slowly since 2016.
Okay, so this is pretty separated from the idea of the central bank digital currency, which many countries are kind of experimenting with right now, right?
Yeah, and I'm always a little confused about that because as far as I'm concerned, currency is kind of digital anyway, right? Like when the Fed does QE, it digitally creates currency and uses that to buy bonds. Where like, I mean, I barely use cash at all anymore. I mean, everything I do is digital currency through my bank here in England or through my bank account in the U.S. But yeah, the idea of like of a sort of crypto dollar or something like that could hypothetically give a central bank a lot more insight into what's happening in the economy. They could view GDP and inflation in real time, but it would also mean potentially a huge loss of privacy in terms of what people are spending their money on. And it could also cut out some of the traditional banks who serves as intermediaries between the central bank and end customers, which I think is why we've seen such reluctance to roll anything like that out in almost any country.
Yeah, I agree. But we had some weird comments. I don't know if I have any of these. When Powell was testifying, I think in front of the Senate, see if I could find it really quickly. We are looking very carefully at the question of whether we should issue a digital dollar. And that might mean we're looking at not to do it.
Yeah, I mean, that may be the case. I mean, I think that there's probably a lot of opposition among the banks to doing it. Because you could hypothetically allow everybody to interface directly with the central bank rather than going through banks. And you have to remember the Federal Reserve itself is actually owned by banks. People think it's owned by the US government. It's not, it's actually owned by banks. So, I think that they have a lot of constituencies they would need to bring on board before they took any action like that.
So explain that a little. That's a great point you just made. The Fed is owned by banks. It's not owned by the government. It's not owned by Chairman Powell. Explain a little bit of that infrastructure.
Yeah, so basically in 1914, Congress passed a law authorizing the creation of a new central bank. So in some ways, the central bank reports to Congress, and its president and the FOC members are appointed by the president and then have to be confirmed by the Senate. But the actual shareholdings of the Federal Reserve are owned by banks in the United States, and the exact nature of the shareholdings is a secret. So actually, it's not public information exactly who owns which part of the Federal Reserve.
So in theory, JP Morgan could own some of it.
I would be surprised if they didn't. I don't know. I don't know who the shareholders are, but I mean, I would think that the big money center banks on Wall Street are probably among its primary shareholders, but I don't know. I have no idea in what proportions.
Wow. Okay. So I appreciate that because there's a lot of confusion over that, right? The conventional wisdom is, hey, this is a department, part of the U.S. Treasury Department, which we know it's not.
Yeah. Yeah, it's very much its own unique entity.
Yeah. So speaking of that, though, just central banks in general, and I don't have any stats, but there seems to be a conventional wisdom that the central banks are buying gold, not just some of them, but many of them. Is that a trend that's going on now?
It seems like it to me. Normally, the gold market trades opposite interest rate expectations. And so, as you pointed out in your previous conversation with Anthony, the interest rate expectations have actually been backing up. The market's been backing off of expectations of rate cuts in taking the view that the central banks will hold policy steady for longer than was previously believed to be the case. Normally, that should have been terrible for gold. Normally, that should have sent gold into a steep dive. Instead, gold had a massive, massive rally up to over $2,200 per ounce, which indicates to me there has to be a buyer, and the buyer I would suspect would be central banks.
Okay, it makes sense. I mean, we've been struggling to get over 2000 forever. Then once we got over there and spent a little bit of time over 2000, and this is in nominal terms, boom, now we're just blasting through 2200.
Yeah, and I think some of the other central banks look at this and they say to themselves, okay, well, I could hold my reserve assets in US dollars or euros or yen, et cetera. But all of these countries are running massive budget deficits. The US has a 6.5% of GDP budget deficit, which is enormous, especially when you consider that we're probably close to full employment with unemployment below 4%. Yeah. So what happens if the US has a downturn? Does the deficit go to 10, 12% of GDP? And then also, you have a lot of countries, huge heightening of geopolitical risk. And so some countries, may be afraid that they'll, wind up like Iran or Russia, the subject of sanctions, in which case holding gold may be a better alternative for them than holding dollars.
So in that sense, it really is kind of a flight to safety for some sovereign entities.
Yeah, that's right. Yeah. And then I think, there's other people who are, jumping on board the trend and being like, hey, if it's good enough for the central banks, maybe it's good enough for me too.
Yeah. Wow. I mean, the rally looks strong, and yeah, I don't see it slowing down anytime soon, but we'll see what happens. You mentioned budget deficit, so I got to ask you, we just passed $1.2 trillion legislation to get us only through September. Is that business as usual, or is that not good?
That's totally business as usual, given the political state that the country is in. I mean, we've been running budget deficits in the U.S. for a long, long time. Really ever since the beginning of the century, when we moved out of surpluses back into deficits. But now what I think we have, it's very interesting and very different, is we have two political parties that don't want to either really raise taxes or cut spending. And so we had huge deficit expansion under the previous administration, and the current administration has just kept running very, very significant deficits. So they're actually smaller now than they were a few years ago during the pandemic, when they got to nearly 20% of GDP. 6.5% is a shocking deficit when you're at full employment.
Yeah. So, but Japan seems to be managing it okay, and they're twice as bad off.
Yeah, so our U.S. debt to GDP for the federal government's a little over 100% of GDP. Japan's over 200%. Now, the thing is, for Japan, for a long time, they had lower inflation in the U.S., so they could just put rates at slightly negative levels. But what's challenging now for Japan and for Europe and for the U.S. is that inflation rates are higher, and so interest rates are moving up. And so in the U.S., we moved interest rates from 0 to 5%. So suddenly the cost of financing all of this debt is becoming much more significant.
Yeah, and there's a lot of in the press and on Twitter and all these other folks, and there's a lot of doom and gloom that's being preached because of that.
Yeah, I mean, I think that there are reasons for concern, but basically, a larger portion of the budget of every country that's raised rates is going to have to eventually go to financing its debt burden. And that basically means three choices. It means either continuing to run big deficits and risking that debt's going to spiral, raising taxes, or cutting spending. Those are really the three options. And for the moment, most countries seem to just take the view that, well, we're just going to let deficits rip. But eventually that might have to change.
So in this scenario, though, is it a better strategy for Treasury to just keep issuing short-term debt over and over and over again, or is it better to just try to issue longer-term debt?
It's very hard to say. I mean, the thing is, if they issue short-term debt, in the near term, they're paying rates of 5.3% or so on that short-term debt, which is very expensive compared to the zero they were paying before.
Yeah.
If they issue long-term debt, they can get somewhat lower rates of maybe like 4.5 or 4%. But that's still not spectacular. But on the other hand, then they're locked into paying that for 5, 10, or 30 years. And so, maybe if the Fed's policies knock the economy into a recession, we wind up with much, much lower core inflation than the 3.8% we have now, the Fed will slash rates, and some of this funding pressure will ease. But then you'll probably have bigger budget deficits as well, because you'll have less tax revenue during a recession, and also higher outlays to cover unemployment benefits and food stamps, et cetera.
Yeah, I've been following the Treasury auctions. Yesterday I think we had a 7-year Treasury auction. The bid cover ratio was like 2.61. It looked like it went off pretty well.
Yeah, I mean, the demand is still there for the moment. So, I mean, I can't really tell you how much longer that will last. But for the moment, there seem to be investors who are willing to plow into these things, and not just for the U.S., but for Europe and Japan as well.
Yeah, it's well, we'll see how it goes. I have like 500 more questions for you, Erik, and we are up against time. And I do want to, so I want to thank you for being here with us today. I greatly appreciate it, especially your Friday before a big holiday.
Yeah, no problem. It's a pleasure, and I look forward to the next time.
Absolutely, we have you scheduled. Appreciate you. We'll see you soon. Have a great holiday and safe travels. I know you're traveling to the U.S., so have a safe trip.
Thank you very much. Happy holiday.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.